Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, November 6th, 2021. Well, we had another great week of shows. I want to thank all of our contributors and thank you, the audience, for tuning in. On Monday, I sat down with Thrive Fantasy's Adam Weinstein to learn the basics about sports fantasy. Let's take a look.
Yeah, it's definitely growing year over year. I'd say even in the last decade, it's become pretty big, whether it's on ESPN or along those lines. But yeah, a lot of experts believe it's a little north of $22 billion a year in revenue between whether it's daily fantasy, just season-long fantasy, or anything as like a third party. That's the type of numbers that are being thrown out there. So as a lot of people could probably assume and imagine, it is more male skewed. With that said, the female population is growing very quickly and rapidly within not only daily fantasy and fantasy, but sports betting in general. A lot of initiatives are around grabbing that demo just because it is a massive demand there. But in terms of the demo, it's mostly 18 to 35-year-old males, at least from the Thrive Fantasy perspective. But with that said, we have a lot of, whether it's older people on the site and playing daily, we are just seeing a ton of new opportunity and new demos coming to our site daily. So right now is a sports fan's favorite time of year. We have all the four major sports happening right now, along with PGA, along with esports, soccer, and what have you. But as you alluded to, NFL is king in terms of revenue generation, in terms of engagement. They essentially have 1 out of the 7 days every week on Sunday where people are glued to their TVs for about 8-9 hours. And that we're not straying away. We're not naive to the fact that the NFL consumer is the most of want just because they're engaging throughout that Sunday and then even on Monday for Monday Night Football and Thursday. But right behind that, you're seeing NBA really scaling and growing very quickly. Major League Baseball and the MLB is not nearly as of demand on the fantasy side, just because it's not as engaging of a game. I'll give you an instance or an example, like your favorite baseball player, he's only getting up at bat maybe 3 or 4 times. So if they're not up, it's kind of like, I can change the channel. But between NFL with that really fun, fast pace, and then the NBA going back and forth, those are the two major sports that you're seeing the most growth on the fantasy side. What we love about Thrive and just in fantasy in general is we're trying to make it as simplistic as humanly possible for that fan who's not an expert or doesn't research and know every player on every team. So in just traditional fantasy sports, when you're playing alongside your buddies or family or colleagues, what have you, it's pretty easy in the sense of you research players, you draft a lineup, and then that's your team for the season. You can trade players or pick them up or release them, what have you. Thrive Fantasy specifically is daily fantasy sports in which every day you have a different lineup and you're playing against other users. So for that, we're only asking you about the top tier athletes, the all-stars in a given sport or esport. So that one's more of a pick up and play type mentality. You really only need to do research for 5-10 minutes in order to be successful on our platform. The reason behind Thrive is that some of our predecessors, such a small percentage of their user base, were winning so much of the money that it kind of was like a scam in any other industry. They'd be like, why is the same person winning all of my money every day? So our simplistic game concept really cracks that down. We're only asking you about, in a given day, 20 athletes. Again, those are the LeBron Jameses of the world, the Tom Brady's. So it takes maybe 20, 30 minutes to research all 20 players and then make your lineup. So the answer is no on our game concept, but yes in some of our competitors. You're seeing NFL athletes tweet all the time, hey, if you drafted me in your fantasy lineup, I'm going to absolutely crush it for you this week, whether it's going into like week 14, 15, 16 for the playoffs, or actually one of our investors, I won't name his name, but he just partnered with Yahoo Fantasy as an analyst. And if you draft him in your fantasy league and you end up winning your week, not necessarily due to him, but he's probably going to be a big reason, and you tweet at him, he gives one fan a signed jersey every week if you have him on your fantasy roster. So all of the NFL athletes are very understanding of their fantasy value, how they stack up. And if they have a bad day, they apologize on Twitter, being like, I didn't mean to ruin your fantasy week. So without a doubt, this has become mainstream, and they're 1000% focused on not obviously making the best plays on the field, but ultimately how that directly correlates and results to their fantasy scores.
And on Tuesday, I sat down with the Motley Fool's Deidre Woolard to discuss enticing workers back to the office with hotel-like amenities. Let's take a look.
Well, it just makes sense because everyone got very used to being at home. They got used to having a couch and a refrigerator and feeling very, very comfortable. And so the idea of putting on business clothes, commuting, going to an office, sitting in a very hard chair at a very hard desk just doesn't appeal anymore. So this is leading to all sorts of changes in amenities, from adding things like dry cleaning or medical services or anything that'll bring people back to the office, and also a change in furniture because we don't like to sit on hard seats anymore. One of the things that we're seeing from the real estate perspective was what they call a flight to quality, which basically means that if you have Class A, top of the line office space, it's probably easier to lease right now than Class B or Class C, which is maybe older offices, maybe a little more traditional. I don't think it's quite the same as the early 2000s because what people want is different. They want less of they don't really care about the pool tables and things like that, but what they really care about is wellness amenities, anything that makes their lives better in any way. So sometimes that's healthy food. Sometimes it's not just gyms, but having classes and things like that. It's anything that you could do outside of the home. Offices want you to be able to do that at the office. And that's part of the allure to get people back to the city, really. If you're an older worker, you've probably spent enough time in the office. There's probably nothing that the office is going to have for you in and of itself. You probably maybe have a family, you have kids, so you want things that kind of fit with your lifestyle. If you're younger and this is your first office experience, you're really looking for that camaraderie. You're looking for that connection. You're looking for an office experience. And so that, I think, is the difference. At the Motley Fool, we have some of the people that we've hired haven't been to our headquarters yet, and they've worked with the company over a year. And one of the things we want people to have, we want them to have that connection. And that's really what offices are becoming about. We're seeing companies think of the office not just as a place where people go to work, but more a place where people go to connect with the brand and to feel part of something, to feel that connection with the company itself. This is all about how you build those connections. And so companies are trying to figure out how to do that omnichannel, the same way you think about retail being omnichannel, right? You have the experience where you're buying things on an app or in a store and kind of experiencing the brand in different ways. It's the same thing with offices, that people are thinking not just about office versus home, but how you connect the two, how workers feel connected via things like Slack, then Zoom, then in-person meetings, how you connect all of that together to give people this really sort of 360 experience of what it is to work for a company. But I think the thing that's interesting is that there's just been a slow pushback because a lot of deadlines, people said people were going to be in the office by September. So we were really looking at that. And then companies slowly pushed back their deadlines. Now we're starting to see people be required to be in the office maybe by the first of the year, maybe by spring. So it's really, the deadlines keep moving. I do believe eventually we are going to get back above that 50, 60% capacity, but that's not where we're at right now. One of the things we are seeing is, I talked before about that flight to quality. Class A leasing is still going pretty quickly. Top tier offices leases are getting snapped up. It's that middle ground. It's that Class B, Class C office space that's starting to become available for both sale and lease. The question is what to do with that in the future. Are people going to want to be in those kinds of offices? Are we going to get back to a more traditional office lifestyle, and how long will that take? My feeling is we probably will, but it's going to be a lot slower than people thought. One of the things that, if you study economics at all, we all have awfully short memories. And this is going to fade from view, just like every other thing that we've ever gone through. And I believe that office life will return to a more normal kind of experience within the next 5 years.
We're halfway through, and when we come back, we'll discuss getting the right insurance for your home and what non-traditional workers can do to improve their retirement outlook. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. On Wednesday, I sat down with former Major League Baseball pitcher and Assured Partners Mike O'Connor to discuss protecting your home with the right insurance. Let's take a look.
I think, personal insurance or homeowners insurance a lot of time is an overlooked part of the financial plan. The way that it is marketed to consumers, through TV ads is, that lower cost is always better. Mm-hmm. So, a lot of people are just conditioned that. And what we try to educate our clients and other people that we talk to is that, coverage is the most important thing first. And then price obviously is a piece of that, but making sure that if you did have a claim, that you're more likely to have coverage for that than with some carriers versus others. So just, no policies are exactly the same. So making sure that they understand what they're purchasing, what might be covered, what might not be covered, and how to best protect their personal assets. And one thing I would add is, more people are relying on their home as a piece of their retirement plan. So making sure that you're fully protected with that asset, because if something happens and you did have to come out of pocket for a claim, that could really set back your retirement plans and things like that. So that's something we stress with our clients. I would say as far as the weather, making sure that you understand what's covered in the policy, what's not. We always, advise our clients to look at or consider purchasing flood insurance, even if you're not in a flood prone area, because that is excluded, as well as earthquake. So, a lot of people, just think that the insurance would cover everything. And that's not always the case. And certain types of claims on different policies will be capped at certain limits and things like that as well. We're able to shop the market for our clients. We have contracts with most of the major carriers. We wouldn't work with like the direct writers and things like that would be with captive type agents, but we would be able to go to multiple carriers. And by doing that, I mean, like as a baseball player, I always tell people, I didn't have, multiple agents that, represented me. I had one person that kind of controlled the market. And by that, we're able to, help negotiate with the carriers to get the best terms and rates for our clients. A lot of times we're recommending higher deductibles. If the client is able to do that, I mean, they would be self-insuring that first layer, but it can provide good savings. And we always recommend not using, the homeowner's insurance policy as a maintenance policy. If you're having a high frequency of claims, you're going to pay a surcharge on your rates for your insurance. So looking at higher deductibles and not filing those, $500 or $1,000 claims, most of the clients that we're working with, we're advising to at least, $2,500, $5,000, $10,000 deductibles for potential savings on the homeowners and really just using it as more of for large claims. And a lot of the carriers that we do work with would waive the deductible on a claim over 50,000, so that you're insuring that amount under 50,000 and minus the deductible. So that can be a good option for people that are looking to find savings on higher value properties.
And on Thursday, Pew Charitable Trust John Scott joined us to discuss how non-traditional workers can improve their retirement outlook. Let's take a look.
Well, I think there are, some interesting questions here. One way that they could do that is and this is sort of one of the more interesting research questions that we had in the project, was thinking about this at a household level. So, you might sort of say, if you're in a household with either a spouse or a partner, I'm going to be the entrepreneur. I'm going to be a sole proprietor and set up my own business. But you, my spouse or partner, are going to have the W-2 job that has the health insurance and the retirement benefits. And we're going to think about this in terms at the household level. And that was really one of the key questions that I wanted to answer in this survey was, just because of the nature of this work, are they thinking a little bit differently about benefits and wages and work? The short answer is that that didn't really seem to have a big effect on retirement coverage of those non-traditional workers that are in a coupled relationship. Only about 1 in 4 got their retirement benefits through a spouse or partner. And so extrapolating that to the whole population of non-traditional workers, that only resulted in just over a 10% increase in retirement coverage. And what's just to add a little bit more flavor to that, we asked a number of questions about coordinating, household decision making or knowledge about retirement planning, and many non-traditional workers are not coordinating with their spouse or partners. And in fact, only about 10%, or I'm going to say 10% of non-traditional workers don't even know if their spouse or partner has a retirement plan. So, we don't see the household approach being a big impact for non-traditional workers. So we have to go back to some of these other solutions that I'm sure we're going to talk about. Part of the issue may be that maybe people get partnered or married or live together that are sort of similar, that they both have jobs that don't have retirement benefits. And so it sort of reinforces maybe that lack of knowledge. And we do know that when someone has a retirement plan, this is prior research we did a while ago, they are much more likely to engage in retirement planning because employers often provide tools and education around retirement and how to save. So I think that the fact that the lack of access, it does have a direct impact on lack of savings, but it also has an impact, I think, indirectly on education. So trying to solve this riddle is really an opportunity. If we can provide access to them, we can provide access to not just retirement plans, but also education. Even beyond just not having a partner, we said even if you do have a partner, it's really not a great avenue for retirement plan coverage. So what can that individual worker do? I'm sure we can get into some specific policy ideas in a second, but just focusing on the individual and just going beyond education, which I think is limited in terms of its impact and reach. I think there are a couple of issues, that are especially pertinent to non-traditional workers. We know that things like automatic enrollment work in the private sector, and these state programs are also using automatic enrollment. But how do you automatically enroll a sole proprietor or some other non-traditional worker? So we have to sort of figure out some of those technical details of using these very useful tools. One option might be that, whether it's a state or maybe an employer that's contracting with a worker, we use something called active choice. This has been shown in the research to have some effect, where you just present the choice, yes or no. Would you want to start having a portion of your pay deducted and put into an IRA? So I think we have to sort of think about the behavioral side of this a little bit, be a little creative. I think the other side of it is understanding how people get paid and how do we deduct 5% of pay in some of these more unusual settings. So when I bought a house, I had a check made out to the real estate agent for their commission. Where in that process do we deduct that money and get it into the IRA? Especially, this is only a few years ago, it was a paper check. So, how do we do some of these more technical things? And they get into the weeds, but they do have a big impact on behavior. So, don't have any clear answers as of yet. That's something we hope to get into in the future with this research as a springboard. But there are key questions. We need more research, and that's of course coming from a researcher. That's what I'm going to say. But I think we really need to sort of target our thinking and our research in ways to test out some of these ideas. So state auto IRAs, we'll just focus on that. But you could. But just thinking about state auto IRAs, so Oregon is going to go down to one employee firms, effectively self-employed people. How is that going to play out? So we'll learn something from that process when they're fully implemented, I think sometime next year, and we'll get some learnings from that. But I think you really have to go out there and meet the people where they are and understand, well, how do people really get paid? How do they feel about having maybe money deducted out of their bank account instead of a regular paycheck? Maybe it's 5% coming out of their bank account. And how do you automatically enroll them, or something like active choice that I mentioned? How might that work in that situation? Maybe it's something entirely different. Maybe we go through the tax system, and when they're filing their quarterly returns, maybe there's an opportunity there for that active choice. Do you want a portion of your money to go into an IRA that we'll set up for you, by the way? So I think we do have to be a little bit more creative with our policy solutions, informed by research and informed by what people are telling us in terms of what will work for them. We know the demand is there, but we just have to figure out some of these smaller details around behavior and sort of the mechanics of moving money around. I don't know the data about other countries and their non-traditional workforce, and obviously different countries, different cultures, different labor laws all come into play. So those caveats aside, we do know the world is moving towards more of a savings-based system and away from that promised benefit of a DB or pension system. We do know that people work in a wide variety of ways, and they get paid in a wide variety of ways, even in the industrialized societies. So I think these issues will resonate and do resonate in other countries. And I think it is going to be an ongoing issue because there are a lot of people who are working, outside of maybe the mainstream labor, structures that we have in place today. So yes, I think it's very relevant globally.
That wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow, this time for BRN Sunday. We'll be breaking down all the news with analysis this week. I'll be joined by members of the media, academia, and industry experts. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.